Well, they call it a stock picker's market, but what does that mean? It means in today's environment, you can't just throw a dart at a board and hope to succeed. Real investors know it's always that way all the time. So what's an investor in this sideways market to do? Well, pick stocks. In a recent report, 8 Capital analyst Kieran Sridharan maintained his bullish take on Tribe Property Technologies, ticker symbol TRBE on the TSX venture, saying the technology company that's disrupting the traditional property management market has an upside of 303%. So what's behind the bullish sentiment on this Canadian junior? Cantech Letter sits down with CEO Joseph Nakhla to find out what's going on with this up-and-coming stock. Joseph, how are you?
I'm great, Richard. How are you?
Joseph, I'm just great. Again, I'm so glad you're back with us because we got lots to talk about. Question number one, Tribe announced its second quarter results where the company achieved record revenue. What's driving this revenue growth and your strong results?
Well, we've had a great organic growth quarter in Q2. As those viewers of ours may know, we are a company obviously focused on helping condo communities and rental buildings get managed. And it's not a surprise to most people in Canada that there's more and more people living in these communities. There's more and more of those big, massive towers rising around us, and they need great technology and great service providers. And we seem to be the chosen ones right now.
You announced the acquisition of Mertis Group Management. I think that's your 12th acquisition, right? Tell us a bit about Mertis.
Absolutely. Mertis is a fantastic company owned by a fantastic entrepreneur out of the GTA market, the Great Toronto area, which is an area that we actually wanted to expand our footprint in. We do work with a lot of developers in that market, and we wanted to actually expand and strengthen our presence in that area. For any of the people that either have visited Toronto or live in Toronto know how the downtown core and the greater area around it have changed. So we wanted to really strengthen that position, and Mertis is one of the great up-and-coming companies there. Brings with it about 5,000 homes under management with a great executive and management teams, and it's a company we've been looking at for a while.
And the acquisition, I know, of Mertis gives you a larger presence in the Greater Toronto area, as you say. How big is your footprint now in the GTA, and how important is it to be a national player as well?
Well, being a national player is critically important for us. There's really only 3 companies that are national that are providing our services across the country. 2 of them are multi-billion-dollar massive companies, been around for decades, and us, the small young company that's obviously growing really fast. Having national presence is important because we work with a lot of developers that are building in multi-provinces and multi-cities. So we want to be able to provide them with the exact same level of service in all the markets they're operating in, as well as many of the big REITs and family offices that own groups and portfolios of rental buildings in different markets. We want to be able to give them the exact same service in these markets. On the GTA side, we actually work with a lot of developers that are building brand new communities in the GTA market. And because we didn't have the full GTA area covered with our property management services, we felt that Mertis really backfills that need for us. And it's been desired by a number of top developers in Ontario asking us to have a bigger presence because they want to give us more business, frankly.
Joseph, how does the pipeline look for onboarding new building for new construction right now?
Yeah, so that's a great question, Richard. I mean, as many people may know, introduced multiple challenges, obviously, but one of the bigger challenges was actually the ability for real estate developers to complete construction on a lot of those big buildings. And that was a function of, in many cases, just supply chain breakdowns. You would have a massive, beautiful building, looks like it's ready to be moved in, and it would be waiting 6 months, almost a year in some cases, for some very basic products, and that has caught up. Let's just say the pipeline is catching up with a lot of vigor as we see it, meaning a lot of those buildings that were supposed to be delivered in the last couple of years are being delivered now. So our pipeline and onboarding those buildings, that's actually an area that we've invested heavily in to bring these buildings up and running and allow people to move in them quicker. So we obviously can start generating the recurring revenue that we have. So that's looking really strong. And because of our reputational growth and the fact that our data is illustrating that buildings that are managed by us are significantly better managed than a traditional model, we're actually seeing a lot of organic growth as well. These are buildings that already exist in the market, 10, 20, 30 years old, and either have been watching us or found some data about us, and they actually would like to move from a traditional property management model to ours. And we're seeing quite a bit of success as well there.
So going forward, what are some future catalysts we can look forward to in the latter half of this year and next year?
Yeah, we've made big investment in our national footprint. This is a function of standardizing and creating systems and processes and tech to kind of support our national presence, and that investment now is going to start yielding us efficiencies. So our shareholders, or those that are actually looking at our company as a potential investment, can be rest assured that we're going to start taking big steps towards profitability. So that's going to be one big area that's going to start growing. Our gross margins will continue to improve. We just had a great gross margin quarter, and that's going to also be a result of a lot of the efficiencies we're experiencing. You'll see us continue to grow. So we're not going to get to profitability through pure cuts. We're going to do that as we still continue to grow, and we're always going to be active in M&A. Our M&A pipeline is really, really healthy, and we're, if anything, we're starting to look for more profitable and bigger acquisitions to be active with.
Lots going on with Tribe Property Technologies. Great to catch up with its wonderful CEO, Joseph Nakhla. Again, look for them on the venture exchange, TRBE. Joseph, thank you so much.
Thank you so much, Richard.